What's up everyone, my name is Lucas from Whalezone and today we are going to take a look at the most interesting crypto news from the past week. Let's waste no more time and get right into it. December jobs report numbers. The US economy kicked off 2025 with some surprising strength. December jobs report showed the economy added 256,000 jobs, significantly beating expectations of 165,000. As you can see on the chart, the unemployment rate actually dropped to 4.1. Bitcoin price movement since the jobs report. While strong jobs numbers typically pressure the crypto prices, Bitcoin has been actually growing pretty quickly. As you can see here, this candle was the candle when the jobs report was released, and as you can see, the price action is extremely bullish. We are currently sitting at $103,000. Why? Because the market's starting to see this differently. As Charles Edwards from Capriol Fund pointed out, these robust jobs numbers actually suggest this bull run could last longer than many people expected. Rate cut probability chart. But there's a little catch. The strong jobs data is making the Fed think twice about those rate cuts that everyone's been hoping for. Interest rate traders have basically written off any chance of a January rate cut, with probabilities dropping from 5% to 0.5%, as you can see on the chart. CPI data comparison. Now, here's where things really get interesting. Wednesday Consumer Price Index report came in better than expected. While the headline number matched the expectations at 0.4%, the core CPI increase of just 0.2% was the smallest we've seen since the July 2024. The market response. Alright, so right now we are on the Nasdaq chart, and as you can see, from the moment that the CPI and core CPI numbers got released, the market was going higher. Nasdaq jumped 2.5% higher and the S&P climbed 1.8%. If we take a look at some basic market technical analysis, we can see that the market went higher and then retested this level before going even higher. This huge fair value gap that got created with the CPI release got retested and market then could go higher. And here we are on the S&P 500 chart. As you can see, this fair value gap right here did not even get hit. The market was so bullish that it actually reversed right above that fair value gap and then went higher. Market pricing of expected rate cuts. Fed Governor Christopher Waller, typically one of the more hawkish Fed officials, made waves by suggesting multiple rate cuts could come in 2025 if inflation keeps cooling. The markets are now pricing in about 40 basis points of cuts this year, up from 34 basis points earlier. Timeline of expected Trump administration crypto policies. As we approach Trump's inauguration, the crypto industry is buzzing with anticipation. Several major developments are already in motion. First, there's talk of an immediate executive orders that could create a crypto council and address the banking access issues many crypto companies have faced. We're also looking at potential challenges to some controversial IRS rules affecting DeFi. The incoming administration has already picked up some crypto-friendly faces for key positions. Scott Bessent for Treasury Secretary and Paul Atkins for SEC Chair could signal a significant shift in crypto regulation. Both nominees have expressed positive views on digital assets in the past. Historical dollar performance during Trump's first term. When Trump started his first term in 2017, we saw the dollar weaken after a year of strong momentum, partly driven by his preference for a weaker dollar. While the current environment is markedly different, with a heightened inflationary pressures and more constraints on debt-driven spending, there's cautious optimism that the new administration can tame inflation while supporting the long-term growth. Right now we are on DXY, aka the US dollar index, and as we can see, this is the day that the first term of Donald Trump started. We can see that the market was extremely bearish and that the DXY was going lower day after day. 2024 versus 2023 exchange volume comparison. Now, let's wrap it up with some fascinating data from the crypto exchange landscape. 2024 was a massive year for trading volume, with spot trading up 139% and derivatives up 91% compared to 2023. The big story here is Binance's changing market position. While still the leader, of course, their market share dropped from 49% to only 39% in spot trading and from 50% to 38% in derivatives. But obviously we have more crypto exchanges right here. As we can see, for example, crypto.com has made a significant growth of 959.7% in spot trading volume. And here's what we're waiting for the next week to happen. As you can see on this calendar, on Thursday, January 21st at 8:30 a.m., we have USD unemployment claims, and then on Friday, January 24th, we have flash services PMI. And that's it for today. Thank you so much for watching. Make sure to click the first link in bio that will take you to Whale Zone, the only community that you need in order to make it this bull run. See you in the next video.